Hello, everyone. It is time for our next session, Mission Compliance, Adapting to Global Regulatory Standards. In the MENA region, regulators like DFSA, ADGM, and VARA are shaping policies to address the rapid growth of fintech, online trading, and digital assets. This session will provide a detailed analysis of how these regulations impact licensing, operational transparency, and compliance for brokers, payment providers, and trading platforms. We'll gain insights into these specific challenges of cross-border operations and how to align with emerging frameworks without disrupting business continuity. Our panelists for this session are Evdokia Pitsillidou, Partner, Risk and Compliance Director, SALVUS Funds. Dr. Ryan Lemand, co-founder and CEO, Neovision Wealth Management. Constantinos Constantinides, Director, FAI Comply. Demetris Taxitaris, CEO, MAP S.Platis Group. And our moderator for this session is Remonda Kirketerp-Møller, founder and CEO of Muinmos. Welcome.
Thank you very much. Good afternoon, everyone, and thank you very much for attending today's event on adapting to global regulatory standards. Glad to see some of you here. This is actually very exciting, at least for the panel. So I hope you're as passionate about regulation as much as we are. Thank you also for the brief introduction to the panelists. And of course, we'll kickstart with the question shortly. I just want to add that in an era of rapid globalization and evolving financial ecosystem, compliance with regulatory standards is definitely becoming more critical than ever. We've been hearing this in today's sessions throughout the day, that regulation and complexity around regulation has become an absolute minefield. And a lot of financial institutions across the world, not only here in the region, are absolutely challenged by it. And I'm extremely excited to shortly introduce the panelists and hear a little bit more, in particular, about the region here as well. I'm Remonda, and I'm the CEO and founder of Muinmos. We deal with onboarding, global onboarding, and of course, tagging global regulation to the onboarding aspects of our offering. We're here joined by our esteemed panelists. Do you want to give just very, very quickly a brief, Dr. Ryan? If you could go down to the end, just a minute or so, and then we'll kickstart.
Sure. Yeah, thank you very much for having me. Ryan Lemand. I've been in Abu Dhabi or the UAE since 2008. I worked for the federal government, mainly as part of the regulatory authority, the Federal Regulatory Authority of the UAE, and then the private sector. And today I have my own private company where we do fund hosting, SPVs, wealth management, fund management. So we have a company in ADGM, Abu Dhabi Global Market, one onshore under the federal regulator, and another company in Switzerland regulated by FINMA. I also sit on multiple boards, locally and internationally.
Hello, everyone, and thank you for the warm welcome. My name is Evdokia. I'm coming from SALVUS Funds, and SALVUS is specialist in licensing, regulatory compliance, internal audits in the sectors of course, investment firms, brokerages. We set up crypto providers, payment institutions, and funds. We are based in Cyprus, in Mauritius. We help in UAE, Dubai, Abu Dhabi, and Seychelles, and anywhere where our financial sector expands. Thank you, and I'm looking forward for this session. Thank you.
Hello, everyone. Constantinos Constantinides. Similar to Evdokia, we do what it says on the box, compliance and regulation, out of offices from Cyprus and the UAE, and have been assisting firms since 2010. Thank you.
Hello, everyone. Thank you for having me as well. My name is Demetris Taxitaris. I'm the CEO of MENA S.Platis Group, a member of ComplyMap Group, headquartered in the UK. Obviously, we're compliance consultants as well, specializing in licensing, compliance consulting, risk management services, internal audit support, information security and operational resilience support. We have been doing that for the last 20 years plus in the UK, London, in Cyprus, the UAE, and in various offshore jurisdictions. Looking forward to our discussion.
Perfect. Thank you very much, Demetris and the rest of the team. So let me kickstart the session with asking Dr. Ryan a question that I'm sure a lot of you will find interesting. I at least have been in financial services for many years, over 22 years, as a lawyer and also a regulatory expert. And I find it quite challenging in the region here. There are quite a number of regulators offering pretty much regulatory frameworks across multiple product lines. And I think for a lot of people coming from outside the region, they are often quite confused in terms of who should we apply to, where should we apply, and what's best for us coming into the region. So if I can get Dr. Ryan to kickstart the session with that.
Hopefully successfully. Thank you very much. So first of all, I'm going to start top down. The GCC, the Gulf Cooperation countries, are composed of the UAE, Saudi Arabia, Kuwait, Qatar, Bahrain, and Oman. Think of them as something very similar to the European Union, probably 60, 70 years ago or 50 years ago. And this is where they're evolving, basically. Each country has its own laws and regulations. They have agreements among them, tax, tariffs, etc., but not yet passporting. The first passporting agreement among the GCC countries will come into effect hopefully in Q1 of this year, where any fund established in one of the GCC countries can be passported across the other GCC countries, just like the UCITS funds in the EU. Now, if you drill down a little bit, we have the UAE. The UAE has been on the forefront and has been the fastest in developing its regulatory framework. The UAE is composed of 7 emirates. Each emirate is independent, so it's like the United States. It's a federation. So you have federal laws that govern the whole country, and then each emirate has its own regulations, not laws, regulations. Okay? Then, if we drill down even further, we have Dubai. In Dubai, you have Dubai as an emirate, and within Dubai, you have free zones. And you have one financial free zone. That one financial free zone is called the DIFC, whom everyone knows. It was established back in 2005, the Dubai International Financial Center. The DIFC's laws are derived from the UK common law, but it is not a direct application of UK common law. That's very important. So it's DIFC laws failing UK common law. Then, newly created, newly, between brackets, it has been now 6 or 7 years, Abu Dhabi Global Market, which is very similar to the DIFC, but the only difference is that ADGM is a direct application of UK common law. So, ADGM is the only jurisdiction in the whole Middle East that is a direct application of UK common law. It's literally as if you're sitting in the UK or Jersey or Guernsey. Now, I know it's a bit confusing because you have 2 financial free zones, and then you have onshore UAE that has a federal regulator. If you want to leave one of these financial free zones and do business outside of the financial free zone, you need to get passported if it's a fund or get approved by the federal regulator. Now, there are additional regulators. There's the central bank. Central bank is specialized in banking, regulating banks, namely Prudential. And then here in Dubai specifically, you have VARA, the Virtual Asset Regulatory Authority, which is specialized in regulating virtual asset companies within Dubai. So they have to do business only within Dubai. So this is really a very quick helicopter overview.
In terms of for foreign businesses coming in, financial firms, do you have any opinion or guidance to offer them?
Absolutely. There's no perfect answer. So the DIFC is today the biggest financial center in the whole region. It has 40,000 employees, thousands of companies. It really has a complete ecosystem. Okay? This is what's perfect about it. The only drawback, in my opinion, is the absence of direct application of UK common law. The third thing is that DIFC was built on the premise of being an investment banking, advisory, financial center rather than asset management, fund management. On the other hand, ADGM is a financial center that was built to become an asset management hub and a fund management hub rather than investment banking. And this is where they both complete each other. So ADGM having UK common law is a no-brainer for someone who wants to create a fund, for example, raising money for investment purposes. Abu Dhabi has the largest mass of sovereign wealth in the whole world, even bigger than Norway. If you add all of the sovereign wealth funds, they are the biggest. In Dubai, it's more tourism, it's more services rather than investment. So Dubai has become a hub rather than a recipient and an investment jurisdiction.
Wow, that's quite interesting. Do you have any comments?
Yeah, I would like also, which is very interesting, thank you for sharing with us. I would like also to share, though, in the brokerage sector, Dubai, though, and DFSA achieved to be the regulator in the region for welcoming these specific products. I agree that ADGM is more of a wealth management funds, and this is the distinguishment that we have to explain to clients when they come and they say why and in which reasons I have to go to DFSA and which reasons I have to go to ADGM and in other jurisdictions as well. And also we have to take into consideration the target market of the client. And this is one of the things that I always say to the clients, and they always say, I want to reach out the whole world, which is impossible. You need to have certain regulations and many different regulations if you want to target the whole world. So, and being in Dubai now, in UAE region, this is one of the things that we have a separation. And again, if you want to target Asia, you have to get other certain licenses. If you want to have Africa, and okay, we have right now Mauritius, Seychelles, where they can onboard this type of clients in Africa, in Asia, but they cannot target UAE. You need to have the UAE regulation.
And that's the complexity that actually lies across. Is we see a lot of financial institutions that are doing global business, but of course the application really comes to where are you onboarding your clients from, what type of clients are you onboarding, and do you need to be regulated in that particular jurisdiction to be able to onboard them for many reasons, not least, at least one of them is client, of course, investor protection, client money segregation rules, etc. I note, go, please, Demetris.
Yeah, thank you, Remonda. Just to add on this, to what you said, I think it's important to identify what clients each institution will be targeting. And obviously, there are two main distinctions here that need to be made. One is whether clients on the mainland will be targeted, in which case probably one has to apply to ESCA for a license, or whether clients in a free zone, especially as regards local wealthy clients, will be targeted, in which case, and this is critical, I think, DIFC has established itself already as the de facto financial center locally, where many high-end wealthy clients, investment firms, and other technology firms are operating. So one wishing to target such clients has to de facto apply or be established in the DIFC, hence apply to the DFSA.
Absolutely. Thank you very much, Demetris. And that actually backs up also the comment that Dr. Ryan made earlier in terms of passporting. I don't know how many of you here are from, for example, the European Union, but we're all very familiar with the passporting regime, and this is definitely something that's been implemented or definitely is happening for the fund sector, and hopefully also beyond that as well.
But excluding ADGM and DFC. So if your fund is created in DFC or ADGM, it is excluded from fund passporting. Only funds created under ESCA. And this is where ESCA is very important, as mentioned. If you're targeting retail, ESCA is the way to go, because otherwise it's really messy.
So that adds to the complexity as well. Good.
If I may add here, because we touch upon ESCA, we'll have also VARA supervised effectively by ESCA, which changes the dynamic of this sector, I say, for DFSA and ADGM, because ESCA also has the brokerage licenses, but then we are also having the crypto. It means that the other regulators have to, in a way, step up or do something differently to retain their business.
Are we seeing any cross-border equivalents outside the area into Dubai and the region?
So from outside of the UAE, you mean? So the UAE has agreements with the EU, specifically on funds again. So any UAE-based fund is considered AIF in Europe and can be distributed under the AIF regime. This is it. Otherwise, ESCA has the largest number of MOUs with most of the regulators around the world, and now ADGM and DFSA are doing the same. But it's only MOUs. It's mainly for enforcement, investigations, rather than for passporting or cross-border.
Yeah, and that could expand in the future. We don't know. Good. Konstantinos, do you have any comments on this?
Just sort of echoing what Dr. Ryan said on and what the other team have said here on the selection of the right regulator, because the DFSA always looks very substantial, and when you go to their conferences, they're talking about small funds of under 2 billion, and they're talking about doubling the amount of investment under the DIFC in funds over the next couple of years through family offices and so on. But unknowing to them that probably the ADGM is a better structure, and then ESCA is going to provide the passporting. So it is a bit of a complex industry to sort of navigate. So just sort of echoing what others have said, really.
No, that's really good advice. Thank you very much. Good. Let's then add to the complexity by bringing Mika into the topic. I would like to actually start by asking Demetris if you could give us a little bit of a brief in terms of where are we with Mika in our part of the world, and perhaps some similarities you are seeing between that and what's happening also here with VARA.
Okay, thank you, Remonda. This is an interesting topic. Obviously, MIGA was introduced 30th of December 2024, very recently. However, the industry has been gearing up for a number of months now. Obviously, there was a period where registration was required, and MIGA provides for a grandfathering period now for all these virtual asset service providers that have been registered within the European Economic Area or European Union to operate in the next 1.5 years until they are able to apply and obtain a license themselves. Interestingly, MIGA refers to crypto assets, spot crypto assets, as opposed to any other financial instruments, including derivatives. This is a big difference, actually, from how the law here, especially VARA, looks at this topic, whereby VARA classifies or is a regulator addressing both spot crypto assets and derivative assets in cryptos. So that, in that sense, VARA's reach is quite extended, I should say, and that is a key requirement probably for all big crypto exchanges operating in spot crypto assets, but at the same time operating in derivative instruments, especially perpetual futures in crypto, which allows them to operate under a single regulator in the UAE. And I think that that is definitely an underlying argument and a key factor contributing towards the success of VARA to date, which has about 23 regulated firms under its supervision currently. So I think in that sense, and taking into account that it addresses all crypto assets as opposed to DFSA or even the Central Bank of the UAE, which have a more limited scope. I see VARA establishing itself as the leading regulator in crypto assets in the UAE going forward.
If I can add here with the insightful information that we are getting here, MiCA, I say, and in my view, because it's the European regulation for crypto assets, and we are all waiting for this to come. Effectively, it's the passporting of the crypto assets in Europe. And something spectacular about the crypto regulation that is adding is that investment firms that are already regulated under MiFID, they will be able, under the Article 60, to opt to offer also their crypto services. So effectively, we are leading to see a European regime where with one entity we will be able to offer passporting to all EU members, both products. And all these entities, they are having same target market, and we are going to have the ability to offer all of those products, whereas in the rest of the world, it's becoming a bit more complex where we have two different regulators, different products, and it becomes more, maybe more specific sometimes, but also more complex and more costly. And we know that most of the people, they see compliance and as maybe sometimes as the cost in the equation, regardless that we try to give the best solution and we are a solution to their problem. Yeah. I see MiCA as the entry of a change in how the overall financial business is changing for the next 5 years. Yeah.
No, that's a good observation, actually, in terms of the complexity in offering two product lines and potentially having two regulatory frameworks as well, which you need to operate under. Do you see any similarities to what we're seeing under MiCA coming into the Emirates? Can you see any kind of, if you look back in the European Union, there wasn't really huge similarities compared to MiFID until MiCA came about.
Exactly. MiCA, in a way, replicates a bit of MiFID. VARA is quite different in the services, as Demetris said, that we are offering and the way they are offered, and even the DFSA and the ADGM, they are different from MiFID. However, all of those regulations, they are aiming towards the same protection of the investors, especially when we have the retail investors. If you are detailed enough in the compliance side and the licensing, you will see the same path of the regulators that they take. Eventually, the regulators are emerging the different regulators around the world, so they have a uniformity of what they are offering. So that we don't have someone to say, you are less strict than the other, if you are top tier, of course. Of course, we will have, again, as in the investment firm sector, in the crypto, in a way, unregulated environment, or the less strict in more third world countries. Yeah, it's very happy, I'll say, to see crypto getting their own form, and it's very important in terms of money laundering as well. That's how it is regulated right now, isn't it?
Exactly. Constantinos? Yeah.
I can just add a little bit to that. What I think we've started to see in the UAE is similar to legislation in the UAE, more market transparency. So previously there was never any sort of transaction reporting. There was never any sort of that side that we've had in Europe for a very long time. VARA, although hasn't implemented it fully yet, does give a framework to start to put in place more market transparency, more consumer protection. So I think we can start to see the influence coming through. That just wanted to add that a little bit.
Demetris?
Yeah, I think it's important for a moment to consider this ability of this provision of MiCA for investment firms to offer at the same time cryptocurrency products, spot cryptocurrency products. And this is a key flexibility that was actually introduced last moment to the regulation, because previous versions were clear in separating the two and keeping them separate. So this is a clear flexibility. At the same time, however, what I want to say is that there are other considerations that need to be taken into account before deciding each client strategy. So things like segregated liability, for example, or banking relationships, for example. You know, we know that a number of banks are negative in supporting crypto assets or working even with crypto firms. So that's an important consideration to be made. Also, any capital adequacy considerations or risk management considerations need to be taken into account. So we see in practice that indeed clients look at this possibility, but often they select to keep the two separate for now, for various reasons, as I just explained.
Good. Yeah, Doctor.
I just want to speak about crypto and the UAE. So I sat on the board of directors of Binance, the topco, as an independent director. And then they came to the UAE. And there are many crypto companies that are coming to the UAE. There's a reason behind it. One of these reasons, the obvious one, is that the highest adoption in the world is in the UAE. So people using crypto to population. The second reason is that the UAE does not have a political agenda. So if you look at the United States, Mr. Gensler, the previous CEO, or soon to be previous chairman of the SEC, he was against crypto. So what happened? He literally almost destroyed the industry in the United States, right? So now President Trump is coming, and he's pro-crypto. So now we're going to suddenly see crypto go up. So when I look at the US, or even the European Union, I am a European, and I'm very harsh in my judgment. It very much fluctuates to which administration it is. So if I have a company in the US and the EU, I would be worried. This is very uncertain to me. This is the behavior we usually see in emerging markets. Whereas in the UAE, it's agnostic. You're here, you have certainty. And this is what people need in an emerging, cutting-edge industry like crypto.
Yeah. And you feel in the UAE it is becoming more, it is accepted, but do you feel that this is the trend and that's why you're seeing more? Yeah, of course, compared to the rest of the world. And actually, even in the European Union with MiCA and other similar regulation, it's actually creating that much transparency that it should just be accepted now that it's happening. So, good. Good. Well, that actually brings us nicely into the next topic, which is outcome-focused regulation. Constantinos, why don't you give a brief about that and where do you see the trend, in particular, maybe between the European Union and the UAE?
I think the European Union being so established, what I'm seeing as a personal note from the UAE is starting to want to become a bit of a trendsetter. So they might not be the people who sort of develop concepts like outcome-focused regulation or agile regulation, all these great terms that we're hearing. But what they'll do is they'll be early adopters. And they won't just adopt it early, they'll also set a standard that is, people in Europe will look at and go, oh, actually, VARA's done that really well. And the framework that they've set for that is really nice. But then also not make it very scary. I'll give a very small example, which doesn't really have to do with their regulation, but when we were moving to the UAE, FAI approached pretty much the DFSA, the FSRA, and they were so approachable to guide you in setting up, but also letting you know that here's a solid compliance framework, this is what we expect from you, but you go and you have your own flexibility about how you meet that standard of compliance. So that's the sort of regulation or the regulatory outlook I see from the UAE, if that's, I think, answered your question. I'm not sure.
It's really good because it's actually quite confusing in some jurisdictions. Let's refer to it as jurisdictions instead of talking about the EU in general form. typically the outcome-focused regulation, exactly as you mentioned, Constantinos, is really leaving it to achieve an objective. Let's say treating customers fairly. Then you do that, and you hope you ticked all the boxes, and then you have the regulators coming in to say, well, actually, you didn't tick this box, even though you thought you did, and you thought you achieved the purpose that you are set to achieve. So how you're finding that? I'm hearing it's more positive here in the UAE compared to what we're seeing. We're seeing a lot of discrepancy across the European Union, the UK, and unfortunately, other jurisdictions as well.
How am I finding that? So I think they give you a little bit more, how should I put it, support. So you have things like the DIFC Innovative Hub. Okay, so that has like 600 institutions in it, which are all there with the same concept in mind, which want you to join the hub, which want you to lean on them, which want to benefit from each other's experiences. Not only with the regulator, but with the setup processes and meeting challenges that different regulations have. So that sort of outlook that the DIFC and the ADGM with their reg lab that they're putting in place really gives people a sort of initial step to go in rather than sort of here's the guidelines, off you go, that we have a little bit more in Europe, I believe.
I mean, I think everyone would agree in the audience, it's always nice to have this form of framework. But of course, if we are moving towards more penalties, more fines from the regulators, then maybe going towards a descriptive form of regulation is better. In fact, maybe Dr. An, you could comment on if you feel the regulators are not doing their job properly. Do you have any advice for the audience? What can they do?
So I'm regulated under ADGM and under ESCA in the UAE. I'm also regulated in Switzerland and used to be regulated in the EU, so I've experienced everything. Let me give you a couple of numbers. 76% of the SEC's revenue comes from fines. I find this shocking. Okay? If you look at the UAE, anyone working here, whether DFC or ADGM, will tell you, regulators are breathing down my neck. They're always watching what I'm doing, but you don't see fines. You know why? Because the model here is regulating by engagement. The regulator engages with you, guides you, so that you avoid making mistakes, but they're watching you. The general average around the world is 25% inspections out of the population. In ADGM and DIFC, it's 48%. So that's how much the regulator comes and inspects, but there are no fines. There are a few, but it's minor. Because the regulator is regulating by engagement. This is extremely important. In the EU, they come with a stick.
And a fine. So, yes, absolutely. Do you want to comment on that?
There are some cases where the regulators feel like the more fines I will issue, it means that I did a good job.
Absolutely.
So,
which is really madness, but yes.
Where it's like treating as the enemy of the regulated entities, which doesn't make sense.
Yes.
And I also want to comment on the side of the regulators are looking of all the regulations that protect retail investors. And we have the concept to say, professional clients, they have less rights or maybe no rights because they know what they are doing. But the question is, are they really know what they're doing, or we push the investors and the regulated entities to say, you know what, my purpose is to make money, so okay, I will focus on professional clients, wealth individuals, I will make my money, and they have less protections. So in the end of the day, are we making regulations to protect people, or are we making for selected people, and because we want to make some sort of form of regulations?
It's really investor protection or something else.
Exactly.
I agree. Any comments from Constantinos, Demetris?
Perhaps one remark we should make is that, interestingly, because Dr. Ryan spoke about the SEC in the US and also in the UAE, if I'm not mistaken, the fines and penalties imposed on regulated firms go to the budget of each regulatory authority, as opposed to what happens in the EU, where actually, in order to avoid that incentive to impose fines, the fines and penalties end up in the each member state's general budget. However, it seems that this is not the determining factor behind what's going on in the decision-making process in relation to fines and penalties in general, but actually there are other factors to take into account in terms of investor protection and usually, especially within the EU, how much pressure regulators get from policymakers and their members of parliament. So this is the overarching factor in my view in this case.
Absolutely. Constantinos?
Just quickly, I mean, from the regulators' side, they've got slightly more to consider nowadays as well than they sort of used to, which is probably why sometimes they struggle to identify which path they want to take. You know, nowadays, you're not only looking at regulating the investment services, but you've also got to take into consideration, like you commented on, consumer protection, data protection. You know, there's loads of sides that you need to look at now. So, and somewhere lines get blurred.
Absolutely. We could spend hours on this topic. Since we don't have hours, we have a few minutes left. What advice would you give, Dr. Ryan, to the audience, in particular from your experience having come from Europe or into the UAE?
It's complex. My advice is to seek a CSP, a corporate service provider, when wanting to be regulated. Choose a CSP and have the CSP do a comparative table. Do not select a jurisdiction just because it's big, just because it has everyone, or because it ticks a couple of boxes. A proper due diligence with a comparative table is essential to taking a decision.
Yeah. And a good thing to do at the beginning, not in the middle of the process.
Adding to that, I'll say the clients has to consider their budgets, their level of in the industry. I'm a startup, I'm a growing, and I built up my brand and keep growing. So it adds up to their business continuity, which is very important. And of course, the most important area is what is my target market, what I want to achieve, and in order for me to be sustainable and make money without suffering of the clients, because in financial services, we are offering services. And this is quite misleading in this world. It's not that I'm trading against the client. You are offering a service and the client comes there with these conditions to trade.
Yeah. Good point.
I think you guys have covered a lot of it. I'd say just lean on the regulators, badger them. They're a service provider at the end of the day. Go and see what they have to offer. Even, you know, there's education on their websites, on many different regulators, there's innovation hubs, there's loads. Lean on them, ask them questions, badger them, and compare the advice you're getting from them, although they won't give you legal advice, to the advice you're getting from your CSP, so you know what you're doing.
Good point.
I think what's important here to say is that clients need to do their own research, speak to eligible consultants. If in doubt, speak to the regulator themselves to clarify the situation and make sure that they understand everything and the arguments before going for a license. I've literally seen myself cases where clients have applied for licenses, got a license, and then realized that, wow, this is not the right license for me. Exactly. So, you know, things like leverage restrictions or things like execution venues, etc., play a crucial role, and you can get caught up in a vicious circle if you don't do your homework right at the beginning.
No, absolutely, Demetris. That's a really, really good point. It makes a lot of sense. Do we have time for some questions? Maybe 2 more minutes. Any questions? Couple of questions? No? Nobody dares ask any question. Oh, you have one? Yeah. Do we have a... Yeah.
Yeah, hi, thank you. USDT, how's that being viewed here? Because in Europe it's not been accepted.
USDT, whether it's accepted here?
Yeah, what's the view from
It's
UAE?
one of the approved tokens or virtual assets in ADGM and in DFSA and VARA. So yes, it is accepted here.
And is it because of the 60% law? Is that what's the difference?
Because of?
The 60% law, which is why it wasn't approved by MiCA.
I wouldn't know.
Okay.
That I wouldn't know.
That's it? Yeah. Well, thank you very much, everyone. Oh, there is one more. Last one.
Good evening, everyone. What are the regulatory frameworks for crypto mining companies that have been looking? And DIFC has been one of the options, but the VARA regulations have been quite confusing in the last 1 year. So what is the future for the crypto mining industry in UAE?
Well, the UAE is quite big on crypto mining. So in Abu Dhabi, they're using two sources of energy. One is gas flaring. You know, when you're pulling oil, you have the gas that comes out. Instead of burning it, they're actually using it to generate energy to do crypto mining. They're also using the excess nuclear energy in Abu Dhabi for that. Dubai is using solar energy. As you know, Dubai has one of the largest solar energy plants in the whole world. To my knowledge, until today, crypto mining companies are not regulated. So as long as you mine, you keep them, you don't need to be regulated. Once you start offering this to clients, then yes, you have to get regulated. It is crypto mining heaven at the moment in the UAE.
Thank you very much. Thank you very much, everyone.
Thank you so much.
It's extremely exciting to actually touch on these topics, and it does highlight the complexity of regulation cross-border. And I think the advice in general is take your time, make sure you get the correct license, make sure you understand your business model, make sure you know where your clients are coming from, and of course, hopefully, once you have your business plan, even if you're an established institution elsewhere, it will give you a better guiding idea of where to establish yourself, even in the UAE, where it seems to be slightly complicated in terms of where and how to establish yourself. Thank you very much, and yes, and pleasure to have you all here.
Thank you.